All right, welcome everyone. We're going to be talking about investing and obviously investing in crypto. So I want to just quickly kick off by letting everyone briefly introduce themselves and also tell me one vertical that you're the most excited about in crypto right now, and we can start right here.
Cool. Hey guys, my name is Akshat. I'm head of investments for Maelstrom, which is the family office of Arthur Hayes, founder of BitMEX. Right now, lately, I've been getting pretty deep into DePIN.
Nice. Hi everyone, I'm Tom. I'm a GP at Dragonfly. We're a global crypto venture fund. Maybe a little bit degen, but I actually find the sort of decentralized gambling casino space very interesting, so I've been looking into that a little bit recently.
Hi, my name is Lasse Clausen, the founding partner of 1KX. We're an early stage crypto network fund, so we invest only in open source token networks. And what I'm pretty excited about, it's been out there for a while, but it's actually layer 2s and layer 3s. Just because I think we've solved scaling, and that's actually a huge thing because that wasn't so obvious for many, many years if that was ever going to happen.
Awesome. Hey everyone, my name is Augie. I'm an investment partner and head of Asia with CMT Digital. We're a 26-year-old trading and investing firm based out of the US. We've been investing in this space for about 6 years. We've raised 3 funds, and we've partnered with over 100 companies in the space. And I guess one vertical that I'm particularly excited about is consumer apps more broadly, in particular East Asian content, which hopefully we'll get into later. Thanks for having me.
Thanks, amazing. So I want to quickly touch on, Lasse, you mentioned layer 2s, layer 3s, and scaling in general and how it's been solved. What are the biggest opportunities in scaling right now that you're seeing yourself in the market? And can you touch on a little bit about what layer 3s are and like why you're excited about them? It seems like everyone's talking about layer 2s, but layer 3s are still a little undercovered.
Yeah, so broadly speaking, a layer 2 is you have, let's say, Ethereum down here, and then you do a lot of transactions, and every once in a while you sort of settle that state, those balances back on Ethereum. And so you can kind of do the same thing that you have your layer 2, and then you've got a layer 3 that does the same thing and settles these things on the layer 2. Broadly speaking, you'll get to sub 1 cent transactions, and then actually mutual portfolio company ZK Sync era that has account abstraction natively built in. So it is extremely easy to create a user experience where you can sign up with an email address as a normal user. You don't need to back up your key or any of these funny things. And so I think it is actually now really for the first time starting to make sense for an entrepreneur to build a consumer app on crypto. We've had that earlier, but that was honestly just because of the bull market and all these people came and said, I also want to play around with crypto and experience it, and that's great, but you're buying an NFT for $50 and then you have to pay $250 for a transaction fee on Ethereum, and they never come back. So I think now, in the next 3 years, I do expect some very, very serious end consumer applications to be actually crypto native.
And do you guys think in general that eventually kind of like the layer 2s, layer 3s, and really like what you're using will be hidden just like on the internet? Like, do you think that the end consumers in the end will just not even know they're interacting with these layers? Anyone? Tom, maybe.
Yeah, I mean, I'm just throwing my 2 cents here. I feel like, the world of general purpose infrastructure, whether it's layer 2s, layer 3s, will kind of become more app specific, but also abstracted away, as you say, right? In a way that when you're actually using the applications, the average user isn't aware that they're interacting with these.
I mean, it's the same way that you don't really know which switchboard, which internet backbone is when I'm having a Zoom call in London with someone in New York, I don't know if it's going the North Atlantic route or sort of through the Azores, whatever backbone is used under the hood, that doesn't really matter.
Or what TCP/IP is,
right,
as an average consumer.
So I think, yeah.
Yeah, I think the app chain thesis has been around for a long time, right? That hey, every application will have some specific needs, and therefore will have its own chain and have its own block space, and that was sort of the Cosmos Polkadot vision. I think we've seen the app chain thesis was roughly right, but it's actually manifesting through layer 2s, where you have your own app, you have your own sort of relationship with end users, and you're going to have your own roll-up that's sort of designed for your specific needs. I think the big kind of question and challenge is more, it's sort of like an air bubble where you push down one side and it pops up in another, where maybe the state storage is now decentralized, but you have a single sequencer that is actually doing all the transaction processing. How do you actually make that decentralized? How do you actually sort of imbue that with the same properties that we want out of these applications?
So we're here, and it doesn't feel like bear market right now at this conference. It feels like so many people. Conference is absolutely packed, but it has been a fairly painful bear market over the last 2 years or so, and it's probably still going to continue a bit. What have you guys seen in terms of like, how does it differ to how you were allocating investing in a bull market? And are there any like trends? Are you seeing more deal flow, less deal flow? And we can maybe kick with Augie.
Yeah, no, for sure. I think, I mean, to start on the topic of valuations, I would say at least from our vantage point, we have not seen valuations correct as much as perhaps you would have anticipated given the bear market that we're in. And I think, for us, we've always tried to be fairly disciplined when it comes to valuation, even if it's a bear or bull. I think that's easier said than done when faced with, psychological factors of a runaway market, but that's kind of always how we've operated as a firm. I think the one thing that has changed for us from an investment process perspective is we now have the luxury of actually conducting diligence, right? I think probably everyone on this panel has that horror story from the bull market of, a super hot opportunity. You speak with the founder for 30 minutes. They say, this is the valuation. This is your allocation. You have 2 hours to decide. Let me know. I think those situations are much less common today. And that is actually to the benefit of both investors and founders, right? I mean, we very much believe that diligence is sort of like dating, right? It's the process of evaluating both parties whether or not this 10-year partnership makes sense. And so I think that's been a positive change in the process recently.
You don't see a lot of founders playing League of Legends during a deal call these days. That's probably a positive change. Very, very much agreed. I think, in crypto, I think kind of the trend that I've seen always is if you only look at the macro, you lose out on the micro. You lose out on like the actual interesting picture. And so, right now, sure, NFT volumes are way down, prices are way down, but mints are actually going crazy. People are minting NFTs like crazy. They're only down, I don't know, maybe 30% from the all-time high. Yep. Okay, maybe overall, transactions are going down, and then you have stuff like Friendtech that's just popping off like crazy. And so there are these little glimmers of interesting traction where there's willingness to pay, there's excitement, there's retention, but it's hard to sort of paint it with a broad cloth. And I think that's kind of what a bear market feels like, is people are trying to experiment and try new things and figure out what is actually going to stick and create new value.
There's also this problem with having too much of a bear market mentality. Remember in the last bear market, Uniswap was raising in 100 million, and we didn't even want to talk to them. It was like, no, this is just a late stage fund, has too much money, they're pushing this up, and it obviously was a fantastic investment and a big miss on our side. So I think the really, really good winners, this was our learning. You have to pay for them, even if their valuations aren't that low in a bear market. But what actually matters more, that you hit really some of these incredibly big winners. And I would say the network effects in crypto are actually even bigger than in traditional ventures. So that matters more than feeling smart about, getting a low valuation.
And have you seen, it seems like 2 years ago, everyone was an investor. It seemed like everyone was an angel investor. There were, a bunch of new funds popping up. Did all of that just end? Are you still seeing that, Lasse?
Yeah, I think it was you and Hasu, right? The top was when you guys said you're doing angel checks now, and and so I think yes, there's definitely way less investors. It's actually hard to close some rounds. Yeah. It's kind of nice because we're all friends again. Before we could actually share deal flow. Before we're all just like I'm not telling you about my deal, and so I think it's good. It's healthy, and also because bootstrapping these networks is very, very hard. You actually want other good funds in there, and then in the bull market, everybody has too much money, and I think it's a healthy thing. If you're a good entrepreneur, what you're working on is very interesting. You can still raise money. There's about 10 times more capital being deployed now than in the bottom of the bear market last one. There's still a lot of money being invested. It's just not ridiculously easy anymore, and that's a very good thing.
Yeah, I think I agree with that. What we're calling a bear market is kind of like a reversion back to what it kind of probably should have always been, sort of normal. The ability to do diligence should be a right and not a privilege. And you're kind of seeing the reversion to that kind of feels like a bear market. But yeah, I think this is kind of like where we should have been.
So you guys are all at the forefront of new projects, new ideas. What do you think, is there anything that stands out in terms of kicking another wave of excitement in crypto? Is there any new vertical that you guys are seeing emerge that wasn't there, 2 or 3 years ago? Is there anything like that you guys notice? Maybe starting with Augie?
I mean, frankly, to Lasse's point earlier, while we are a generalist fund, we invest in base layer protocols, infrastructure, and applications. I would say for myself and my capacity covering Asia for the firm, I spend a lot of time looking at applications, and that's very much for the reason that Lasse mentioned. our belief as a shop is that some of the core infrastructure challenges of the past few years have now been solved to the point where meaningful consumer experiences cannot be built, right? I think the counter argument that we oftentimes hear is, we're in a bear market, there are no users. You build consumer apps, you're going to be throwing your head against the wall kind of thing. And I fundamentally disagree with that, I think, for a couple reasons. One is, even if you are trying to time your product launch with a bull market, you need to build those products. And so maybe it makes sense to fund and start developing your product at this juncture. But two, and perhaps even more importantly, while a bull market is perhaps a catalyst for initial adoption, I think the more important metric oftentimes is retention.
Yeah.
And retention comes from building a product that people love that solves a real problem where crypto adds a 10x better experience. And so long story short, I think we're spending a lot of time looking at consumer. What that means specifically is gaming, which I think is at this point a bit of an obvious one. Content, which is particularly relevant in sort of East Asia. Think anime, K-pop, these sorts of things. And then finally, I would say decentralized marketplaces, which are also starting to come a little bit more into fashion.
And how do you think we get away from the trend of like building unsustainable, almost token economics that lead to these like fairly popular consumer apps, but they're popular for like 3 or 4 months, and then it all like goes to nothing again? Have you guys seen a change from that, where now it's maybe focused a little bit more on sustainability because no one's really buying tokens anymore? Lasse?
I think you probably have this sort of core degen group they're going to fall for this no matter what. I don't think that's ever going to change. But we already had that basically in the last bull market. We had a large influx of mainstream users that never came back, right? So I think they seem to be smart enough to realize when this is sort of a bit more short-term and cyclical. But I think there will be, there's a core group of people that they'll make a casino out of anything. And unfortunately, it's very easy to do that in crypto. So I'm afraid that it's not going to go away, but I think really when we're having 100 million monthly actives, 500 million monthly actives, and they're coming back and they're staying sticky, then we know we've hit something. Yeah.
Obviously we're in Asia, and it seems like the ecosystem is just vibrant here, whereas compared to the US, it seems like it's a little bit less so, a little bit less enthusiasm. Are you guys seeing the same trends of like founders, leaving the US because there's so much uncertainty around regulations, around what will happen to the founders? And where are these projects going? Maybe starting with Tom.
Yeah, I think Dragonfly maybe has a somewhat unique perspective on this in that our fund is really 50-50. I'm based in New York. We have about half the team in the US, and then we have an office in Singapore. We have about half the team out here. And so, we see teams, in the US, in Europe, in Asia, and really sort of is, fully comprises our portfolio. I think, as last week we saw with the CFTC settlement with Open and 0x, there's a very sort of almost predatory regulatory environment in the US right now. And so even for teams that are acting in good faith, even for teams that are trying to build meaningful products, it's just really difficult to operate in the US. And so stuff kind of teeters back and forth. I think we saw the opposite case in 2021, China banning Bitcoin, China banning mining exchanges. Hopefully, we saw some guidance from HKMA earlier this year around trying to welcoming crypto back to Hong Kong. I think similarly, we'll probably see more of that rebalance shift back to Asia, but who knows in the future, maybe things will shift back. And so I think that is kind of ultimately the story of crypto is people want these products, builders will keep building, and it's really hard for any one government to kind of shut down this entire ecosystem.
That's the really interesting part about this asset class aspect, that it is geographically diversified, right? And so you've had what Tom described, right? China sort of turning very bearish or aggressive. Then the US was open and there was a lot of activity. Now we've had sort of a reverse of the trends. And we're actually seeing a lot of interest from Chinese tech, sort of successful former founders that said, okay, it's great, we made a lot of money in tech, but now, there's one political decision and sort of our wealth is destroyed. And then we see a lot of interest actually there through Hong Kong, where they're realizing, okay, this is an asset class that actually that risk that politicians are going to do something stupid that always exists really everywhere. And so at least we're hedging it sort of geographically that, by some countries and regions.
And do you think that's reversible, the US trend overall? Like, do you think that will ever actually fix itself?
I'm very, Churchill, he said, you can always rely on the US to do the right thing after they exhausted every other option. And so I feel like right now the US is shooting in every direction and it's all really bad. But I think it's a system that is based on a lot of chaos, right? if you look at Europe, if a financial regulator says something, it's law. You don't even talk back, right? But the SEC actually has to sue you and win in the court. That's the only thing that matters. They can say whatever they want. They can call it crypto asset securities as much as they want. It's really the courts that decide. So it's a very, very messy system, but I think it's also the one that where you get the best organic change through that kind of very messy process. And it really is, it's the Biden administration. It's not even the Democratic Party. So from the Blockchain Association, we know that it's really bipartisan, especially among ages. So if you have the older members of Congress and Senate, unfortunately most of them are really old, they are very against this. And then if you have younger members, Democrats or Republicans, are actually quite pro this. But we have a very, very hostile White House administration. And so we'll have to see next year what the next election brings. Also, SEC chairman, average tenure is 3.5 years, so he's kind of expected, Gensler is expected to leave next year.
Yeah, I think Maelstrom's kind of in a similar boat as Dragonfly. We're spread out. I'm in Hong Kong, Arthur's in Singapore, we have a guy in the US as well. And a lot of the deals, so we're focused mostly on infrastructure. About probably 2/3 of our deals have been in the US, but what that means really is US teams incorporated offshore, being very careful about the way they're structuring. But the infrastructure seems to continue to be built in the West, Europe, and the US, with applications then in Asia. And from a regulatory standpoint, we've been in this space kind of straddling both continents for a while. And I think I would echo what you said there, that in the US, even if there's a hostile regulatory environment, there are means to fight it in the courts. And once that's settled, it's settled. And that's a kind of a gradual process. So long-term, we're bullish US. But in Asia, it's kind of, you see this like flip-flop kind of back and forth, and there's no recourse. If one day Hong Kong is amenable to the crypto industry, that could change in 2 years, and there's really no way to fight it. So it's kind of it's a seesaw, and both have their own unique quirks.
Yeah, and I was just going to say, I think in terms of where people will go, I mean, at least for us, we're starting to have this conversation with some of our portfolio founders that are based in the US, but we've not yet seen significant movements. But the places that come up as a potential destination, I think to Akshat's point, Hong Kong for sure, Singapore to some extent, I think Thailand even, these geographies maybe in some instances can't be considered necessarily crypto friendly, but I think what they have versus the US is clarity, right? And I think that's what a lot of founders are craving. Like, where do we stand? At the very least, is a question they want to answer.
And do you think in the US we'll only get the clarity once it's actually decided in courts? Or do you think it will happen before?
Well, you could have legislation before. I think the stablecoin bill is actually looking decently, maybe have a chance. It is very hard to pass things right now in the US. But I think that could really change things, that you just get legislation and then the whole thing is, back and forth is over. There's actually another thing is that it's called the Chevron doctrine. And so that basically gives you, in the US, these regulatory agencies a lot of their authority to interpret their own authority. So everything that Gensler is doing right now is based on that, meaning he's spending taxpayers' money to do these legal tricks to get jurisdiction over, legal precedent over it. And if that is revoked, which it looks like the Supreme Court is reviewing that at the end of this year, it's a very conservative Supreme Court now. If that gets revoked, then Gensler and any of these guys, there's nothing they can do unless they have explicit, authorization and mandate from Congress through a new law to, go and sue these DeFi projects into the ground.
I think at a minimum, we are also seeing good case law come out. I mean, the SEC, losing their lawsuit against Ripple. There was the ETF lawsuit. There was this Uniswap lawsuit that was ridiculous recently. And so, it's like you said, you can bring a suit, but you have to prove your case in court. And we're seeing that the courts are agreeing with consensus, which is, these regulatory agencies are acting way overstepping their bounds and bringing kind of insane cases.
Yeah. What's interesting there, though, I mean. And I imagine all of us, when we saw this news come out, we're like popping a beer. We're celebrating. I mean, it was massive, right? At least for us, we didn't see as much price impact from some of this recent positive catalyst as we would have expected. And I guess I'm just sort of thinking for the next cycle, like what needs to happen, La? Just because all this news, the recent Web2 giants moving into the space like PayPal, Visa, etc. I think recently, though, 2022 was like a lot of FUD onslaught. Like the last few months, I think generally has had some positive news, but that has had very little impact on overall prices. And so it just makes me think about what will need to happen for us to really see significant upward price action. I don't know if you guys have any thoughts on that.
I think kind of going back to what you were asking about investors, I think the difference between now and 2019 was, in 2019, a lot of people who weren't already in crypto almost had the idea that crypto was dead.
Right.
This was a fun bubble, and now it's dead, and it's never coming back. Now, sort of the feedback that we get is it's a pause. It's not no, but maybe not this year, maybe next year. We're looking, but we're not deploying. And I think that's big. People understand the value and they see the potential, but they're sort of waiting for different conditions. They're waiting for something to sort of speak out to them. And so maybe that's a better regulatory environment. Maybe that's better applications, whatever. But sentimentally, it's a very different direction.
I think it'll boil down to the applications. I mean, you look at Zoom as a good analogy. Zoom had been building for 8 years what eventually would become the norm in the workplace. But for that initial 8 years, it kind of felt like a sort of a fringe augmentation to the workplace. Certain conditions in 2020 created an environment where that became the workplace. The change happens very quickly. It's kind of like punctuated equilibrium. So I think crypto will probably go through the same thing with certain conditions, probably based on applications that just catch fire.
How are you guys thinking about investing in token opportunities versus equity opportunities? So you mentioned before, Akshat, that a lot of the infrastructure is still in the US, which is mostly equity opportunities, and then a lot of the token opportunities seem to be more global, non-US based. How are you thinking about those two opportunities from like a return perspective, as well as like the expected outcome, right? Like obviously, tokens seem to have faster liquidity, but also, equity in some cases could somehow provide higher returns as well long term, depending on how, what the unlocks look like and all of that. But how are you seeing the difference in terms of allocating?
Yeah, so we've been really pushing companies that we invest in to really think critically, do you even need to tokenize?
Yeah.
If you're trying to solve a cold start problem, or there's some reason to have a decentralized token-based value flow, then do it and design it well, and we help portfolio companies with that. But sometimes we're investing in companies that are SaaS-like, and there's no particular reason. There can be, but that's been a big shift, I think, from the first couple of cycles that we were involved with. I've been in the crypto space since 2013, and kind of going through, I guess, those 3 cycles. We've seen a lot of tokens created for the sake of creating tokens. I think that is actually genuinely changing now. The other thing is, how is value actually accruing to the equity versus tokens? That's a key part of our diligence, and that we've done deals and declined deals on that basis alone, even if the product is strong.
Yeah, I mean, every cycle, every bear market, you see this flight into equity. The good thing was that we have a pretty strong sort of thesis around open source token networks. That for us is a big innovation, because that's what, you have trustless systems. So I mean, if you think of FTX, if it had been a decentralized exchange, this whole story would have lasted 5 minutes, right? The first guy sending money there sees it's going out the door, and it says, okay, story over. So with open source token network, networks, tokens is the only way. And we did really well that in 2018, 2019, when the existing funds felt safer doing equity, and we doubled down on a lot of our winners that were basically 1/3 of the price. So with that, we became actually a very large fund. And so we're kind of doing the same thing again. There's some opportunities where it's very clearly, institutional staking infrastructure that is very, very clearly an equity company. It doesn't make sense to try to push a token in there, but I think independent of the prices of tokens, you should invest in great projects. Whether they should be token networks or equity companies, that's TBD. But we definitely see a lot of flip-flopping of investors. In every bear market, equity gets overfunded, and then when tokens are mooning, then everybody's chasing tokens again. Yeah.
How do you guys view the role of investors in general in helping companies, like, for example, structure token economics, or like think about, go-to-market, think about sustainability? Is that something that you guys advise the companies on once you invest, or is that something that is a requirement before actually allocating capital?
If you're a founder, I think building a cap table is kind of like portfolio theory of your own. Each investor has their own value add, and ideally you have non-overlapping differentiate investors, with each one adding something to the mix. So Maelstrom, our MO is small checks. We're not competing with these guys. We're not overlapping. We're additive. So we like to help portfolio companies with what Arthur's good at, which is storytelling. But we also advise on things like tokenomics and other stuff like that.
Yeah, I mean, for us, I would say one of the more special things about partnering with CMT, if you're a prospective business or founder, is the fact that we are attached to a world-class trading operation and all of the trading expertise, market-making support, and tokenomics support that entails. So we do have specialists that kind of assist on this piece. To answer your question more directly, I mean, it really depends. I do think, to Akshat's point, it is a little bit the latter for us, right? We are and have been asking the questions, why does a token even matter in this instance? And I think it's only recently that a lot of founders have had more carefully constructed answers to that question, at least in my experience.
Yeah, I think at Dragonfly, a lot of people in the investment team, including myself, were technical and worked in the industry prior to joining. I used to lead product at 0x before joining Dragonfly. And so, for our portfolio companies, more often than not, most of the time that we're spending is talking about product, technical architecture, go-to-market, things like that. I think token stuff is sort of like a cake. It's like you need kind of a good foundation, but I think adding frosting doesn't really add that much more to the cake. And so that's kind of one thing that we look for, but really it's more, hey, can you build a compelling product that people actually want to use versus, hey, can you engineer some Ponzi token scheme to try to make this number go up?
Yeah, so we, for example, we created a new governance framework for SAFE because it actually is, it is very, very complex, and we've seen basically DAOs being all over the place. So it's a nice space, especially as former entrepreneurs. You can actually really, work, and you can loosely coordinate with the founders, but you just kind of do it, right? These are sort of networks of loosely coordinated actors. And you sort of battling it out there in these governance forums, and then you can have a very thoughtful proposal, and then one retail guy actually comes up with a brilliant counter, and you're like, fuck, it's a huge team and we didn't think of that. So this is a nice thing that it's basically a company, but it's a protocol that is developing itself in the open, and so it's a very participatory process, but you can also become very, very proactive and do a lot of things. Yeah.
Tom, you guys invest in larger check sizes most of the time, right? Like most of the time more than $5 million. How is it different, if you could describe to the audience, versus investing in the seed rounds and a few $1 million here and there? Does it mean, longer due diligence? Does it mean getting to know the founders a little bit better? Or does it just mean investing in later stages?
Yeah, I mean, we raised our third fund at the beginning of 2022, which is our largest at $650 million, and different sort of investment process than our other funds, which are much smaller. We're still doing seed checks occasionally, but a lot of the times, a lot of the seed deals that we're doing are just too small for us these days, unfortunately. And so, looking at later stage, you're right. It is more diligence. It is more sort of providing more proof around product market fit, around economics of the business, around financials, and sort of there's more to look into as well. Oftentimes with the seed stage investment, it's just a proof of concept or sort of a prototype, and so the diligence is more a little bit lighter weight. I think what's interesting right now in the market is I think overall later stage crypto has been kind of tricky. There's not been a lot of great wins, and so what we're looking at is things like secondaries, things like adding structure to existing deals, things like, hey, there's those few companies that actually maintained a healthy cap table, didn't raise too much, didn't raise some crazy valuation, looking at their next stage. But it's definitely a strange market right now. There isn't sort of the very healthy going from seed, going to A, going to B sort of ladder that we see in venture traditionally. It's a much more sort of back and forth and trying to find a round and a cap table that makes sense for a given company.
Yeah. For what it's worth, I think this topic and I do think that this is one of the fundamental traps that venture investors can frankly fall into. And I'm not saying that Dragonfly or anyone on this panel is, it's more like moving outside of your core competencies and a bit too far adjacent. Right? And you've seen this in the past more in traditional funds than in crypto, but we don't want to just be venture investors. We want to be growth, and maybe not just growth, but we want to do public markets and do crossovers and buyouts and incubation and this and that. And maybe that's possible, but I think we have seen notable examples to the contrary, even from my own alma mater, on how venture doesn't scale in certain instances. And so I think that is another interesting discussion point. I don't know if anyone has views.
I think I'd agree with that. Yeah, we try to stick to our niche. Arthur is one of those investors who's built a profitable unicorn from scratch, and that's kind of the phase that we like to get involved with companies at, kind of the pre-seed through seed. Product market fit process has begun. There's line of sight into revenue, but they're not quite there yet. We like to invest where we can be helpful and bring whatever track record that we have as an organization that invests but has a building heritage to our portfolio companies. So I'd say, yeah, focus on your core competencies. I totally agree.
So we're running out of time. We have one last question that I want to ask every single one of you, and that's which recent investments that you guys did is exciting to you and why? And we can go one by one, and then that'll be it. And we can start here, Akshat, if you're ready.
Yeah, so our fund is pretty new. We just got launched in November last year, and we started doing deals in February. So we're pretty early shop. We're writing 100K to 250K checks for the most part, pre-seed through seed. And I think one of the biggest categories for us has been Ethereum staking infrastructure. Anything that contributes to the cause of eliminating critical points of failure, and making the entire network safer. So one of the deals that we did that we're super excited about early on is one of our first deals. Actually, was our first deal. It was Obol. They are building to simplify their product offering. It's essentially a way for multiple subnodes to act as a node to decrease the number of critical points of failure in proof of stake networks.
Cool, Tom.
One deal we did recently, which was a co-investment, is Athena. I think one of the classic venture faults is saying, hey, this idea has been tried before, it's never going to work. I think Athena is truly the best approach at creating a cash and carry stablecoin of a decentralized stablecoin backed by decentralized assets that also generates yield. And so, Athena actually has a very brilliant design for tapping into massive futures market that exists in crypto, but coupled with staking yield that you're actually getting from liquid staking derivatives. So really excited about that one. I think it's tackling this massive stablecoin market in a new way.
We recently invested in a project called Storyverse. It's the co-founder of Zynga. So I think it's probably the person in crypto with the most experience of creating consumer products with 300, 400, 500 million monthly active users. So I'm very excited that we're going to get one of those entrepreneurs with that experience to really build a mainstream application in crypto.
So I was going to say Athena, and then I was going to say Storyverse, so now I'm a little bit scrambling. We also invested in those two companies. Maybe another example I can give from Asia in the consumer space more broadly is a company called Superfine. Superfine is a Ho Chi Minh-based gaming infrastructure company. It's basically a tool that assists Web3 studios to acquire users on traditional Web2 ad networks like Google Ads or Unity ad networks. And the thesis here I think is quite interesting where, crypto in the context of gaming content has value, but it feels a little bit far away, right? It necessitates the value proposition of ownership in content, specifically in content in gaming, usually means that you need interoperability, et cetera, to make it make sense. On the infrastructure side, I think it's quite clear, the value proposition of crypto, which is in a post-IDFA degradation world where it's impossible for any studio to target and bid on their users profitably, arguably wallet data, historical purchases, is a better indicator of future spend. And so you can build better spend propensity models on the back of this wallet data. And so that's exactly what Superfine does.
Cool. Well, we've run out of time. Appreciate everyone for coming. Thank you guys for a great discussion. And please give a round of applause for the panelists. And thank you guys.